Hi everyone. Today we will discuss about the price cap of Russian oil at $60 per barrel and its impact on geopolitical issues. The group of seven major powers, the EU and Australia, agreed to a $60 per barrel price cap on Russian seaborne crude oil. Moscow insisted that it would not sell oil that is subject to a price limit agreed upon by a group of seven nations, even if it means cutting production. It's a US-backed plan to limit Russia. Supporters of this plan feel it will put a dent on Kremlin's finances while still keeping enough Russian crude on the market to avoid a global oil price shock. Russia said, "We will sell oil and oil products only to countries that will work with us on market conditions, even if we would have to lower production." It relies on each party in the supply chain of Russian oil to attest to the price of shipments, and insurers and shippers have warned that records could be falsified by those seeking to keep Russian oil flowing. While deciding the price cap, the negotiators decided on a price that is in the neighborhood of what major buyers of Russian oil like China and India currently pay. Zelensky said if the price limit is $60 instead of, let's say for example, $30, which Poland and the Baltic countries talked about, then the Russian budget will receive about $100 billion a year. The world number two oil producer, Russia has been able to reroute much but not all of its former Europe shipments to customers in India, China, and Turkey. The average gas prices have fallen for US drivers to $3.4 per gallon. While US, European, and allies want to punish revenues of Russia, but they also do not want sudden loss of Russian crude that could set oil and gasoline prices back up. That is why the G7 price cap allows shipping and insurance companies to transport Russian oil to non-Western nations at or below that threshold. Most of the global tankers fleet is covered by insurers in the G7 or EU. The cap of $60 a barrel is near the current price of Russian oil. The Saudi-led OPEC oil cartel and allied producers, including Russia, did not change their targets for shipping oil to the global economy amid uncertainty. What is OPEC? OPEC is Organization of the Petroleum Exporting Countries. Currently, the organization has a total of 13 member countries. The G7 price cap will allow non-EU countries to continue importing seaborne Russian crude oil, but it will prohibit the shipping, insurance, and reinsurance companies from handling cargoes of Russian crude around the globe until it is sold for less than $60. Russian Ural blend sells at a significant discount to international benchmark Brent. What is Ural? Ural oil is the reference oil brand used as the price benchmark for Russian oil exports, while Brent crude is a classification used for major trading and serves as a benchmark for purchases on global financial markets, while the USA uses West Texas Intermediate as the benchmark. Moscow believed to require around $60 or $70 per barrel for fiscal break-even. As during the second week of December, if we look at the prices of various oils, then Brent crude Ural oil is around $53.23. Russia is already selling its oil at a discounted price of $65 per barrel, and to India it's offering at a discount of 30 to 40%. Per barrel cost of production of Russian oil sits around $30 to $40. Buyers in China and India might not go along with the cap, while Russia or China could try to set up their own insurance providers to replace those barred by US, UK, and Europe. Most insurance companies are located in European Union and the UK. The European Union will also stop any imports of Russian petroleum products from February 5, 2023. A G7 price cap on petroleum products will also be set at a later date using exactly the same mechanism as for crude oil. The mechanism will ensure the new price cap is kept 5% below market prices. Poland, Lithuania, Latvia objected to a $60 a barrel price cap, while Russia assembles a shadow fleet of 100 oil tankers in a bid to burst all Western sanctions imposed. Shipping brokers and analysts said that they estimated Moscow has quietly amassed more tankers this year from Iran, Venezuela. What is Shadow Fleet? Shadow Fleet is a scrappy fleet of tankers with obscure ownership. These vessels are old and plucked from near retirement for the lucrative oil smuggling market. Oil could be transferred from one ship to another and mixed with oil of similar quality to disguise its origin. These tankers are generally 12 to 15 years old and would be expected to be scrapped in the next few years. Experts expect Russia's export to fall, while others like Rystad, which is an energy consultant, said that it will be around 2 lakh barrels a day. Russia needs more than 240 tankers to keep its current exports flowing. OPEC Plus, which includes OPEC, Russia, and allies, to continue slashing oil production. OPEC Plus cut oil production in October and planned to continue oil cut production by 2 million barrels per day from November 2022 until the end of 2023. OPEC Plus agreed to stick on this strategy, which means oil cap may not work. As oil supply falls, the oil price may rise. On the other hand, Russia threatens to cut oil production in the face of a price cap. Western world wanted to limit the earnings of Russia from fossil fuels and at the same time wanted to ensure continuity of Russian oil exports. When Russian's oil is completely removed from the global market, a very rapid rise in global oil prices would cause the entire global economy meltdown. We see that there is a Western monopoly on insurance and shipping. During this period of vulnerability, there might be a situation where there can be alternative to Lloyd's of London or Greek's merchant fleets. Oil trading occurs 27% via ghost tankers to evade the insurance cost, including any sanctions. Russia is looking for various possibilities, like it purchased 100 tankers in a bid to burst Western sanctions imposed. It's also looking for insurance alternatives, and Russia can export its oil through dark fleet tankers like Venezuela and Iran did. Russia is also building its shadow fleet. Seeing this vulnerability in the oil scenario, India is exploring Canada, Brazil, Colombia, and Venezuela for oil. The Russians took their latest deal with China in yuan, which is the Chinese currency, in spite of their desire to keep the ruble propped up. Ruble is the Russian currency. Oil price can go through the roof. You will see a boomerang or domino effect in Europe due to these decisions. OPEC Plus will not produce more oil to replace the Russian Ural oil on market. Safety environment risks of shadow fleet is a concern. If that tanker goes down in the middle of the ocean, somebody needs to pay for all the cost to recover that and clean up all the environmental damage being done. The Turkish government recently stated that all tankers loading at Black Sea ports will have their insurance vetted prior to transiting the Bosporus Strait. 10 million barrels of oil per day is produced by Russia. Russia being having oil mixed in through oil hubs in the Caspian Sea, which ends up in Turkey. The refiners in Europe are used to Russian oil. Main exports of Russia is oil and natural gas, out of which two-thirds of it was to Europe and was in euro or US dollar. We will continue to provide information on such relevant issues. Do like, share and subscribe to our channel. Thanks for watching.